the numbers actually look really good. Their monthly active users continue to grow very rapidly. I've always been a big fan of Uber and Lyft. My big concern now is on the driver side. They've done a great job with customer acquisition on the rider side, and they actually have negative churn, which means that the older users, the older riders actually generate more revenue for them. As you and I probably use, once we download the app, we end up using it more. But their churn on the driver side has been picking up. It used to be a little bit annually, about 50% of the drivers will still stick around. Now their monthly churn is 13%. So if you annualize that, that's about 81% of the drivers are no longer around after a year. So they really have to pick that up a little bit better.
Jeff, what stands out to you in the report?
You know, I was actually, my analyst team and I were talking about it this afternoon, and we actually thought that, Dara and the team would come in with numbers higher than what we were expecting. They did exactly what we actually thought that they were going to do. And again, for me, I'm very bullish on Uber, big leaning in on mobility as a trend from an investment perspective. We like everything that we saw today. So we're very happy with what we see. We've been invested in this company from the private markets. Now we're in the public markets. I think Dara and the team are doing a great job of positioning the company now to face off with the scrutiny of the public market.
Gwen, they're burning about $1 billion in cash in this past quarter, and the general theme from both Lyft and them is that competition has eased a bit, that things are getting a little bit more rational. Does it concern you that even in that environment they're still getting through so much cash?
I think for any sort of software company, a SaaS company, you have to look at both contribution margins and actual cash burn. Contribution margin includes all the marketing and growth expenses. It adds back all the marketing growth expenses so that if they stop growing, contribution margin is actually the real margin that you would have in the business. So it's useful to look at both. And I think the other thing is similar to when we went from Microsoft selling us, $200 for Microsoft Office and then started charging us on a monthly SaaS basis. It's useful to look at long-term customer value versus customer acquisition cost, right? So the payback period usually in software is about 2 years, and the lifetime customer value is 4 times that of customer acquisition cost. And Uber is still staying within that. So to me, it's the business model is still profitable.